JustConnect TV, streaming live. JustConnect TV is your entertainment and educational channel. We broadcast authentic content that will inspire, empower, and stir up the potential and positive energy in you. JustConnect TV, streaming live. Get yourself a high-quality branded hoodie, t-shirt, caps, umbrellas, you name it, we got it. You order, we deliver. JustConnect.
Nitalinda moyo wangu kuliko vyote nivilindavyo, maana humo ndimo zatoka chemichemi za uhai wangu. Nitalinda moyo wangu kuliko vyote nivilindavyo, maana humo ndimo zatoka chemichemi za uhai wangu. Nitalisoma neno la Mungu na kulitafakari usiku na mchana, maana ni taa ya miguu yangu na mwangaza wa njia yangu. Nitafunga na kuomba, maana katika maombi nitashinda majaribu, nitashinda majaribu. Nitalinda moyo wangu, nitalinda vyote nivilindavyo, maana humo ndimo zatoka chemichemi za uhai wangu. Nitalinda moyo wangu, nitalinda vyote nivilindavyo, maana humo ndimo zatoka chemichemi za uhai wangu.
Nitalinda moyo wangu, maana humo ndimo zatoka chemichemi.
Sitaki nizeke au nife mapema kwa kubeba watu moyoni mwangu, au kuweka hasira moyoni mwangu, bali najipa mwenyewe kwa kusamehe wanaonikosea na watakaonikosea. Nitajaza upendo moyoni mwangu, nitalinda moyo wangu kuliko vyote nivilindavyo, maana humo ndimo zatoka chemichemi za uhai wangu.
Ever felt the need to learn how to play a musical instrument or improve your music skill and never knew where to go? JustConnect School of Music is the place to be. We offer professional training in music sight reading, piano, drums, guitar, saxophone, bass guitar, and vocal training. We are located at Eprin Square, 3rd floor, room 26, opposite Buruburu Police Station. JustConnect, building worship. JustConnect TV, streaming live.
Hello, our viewers. This is JustConnect Online TV, and today we are going on our medical platform to talk about the insurance, the value and the importance of insurance. And I'm joined by Mr. Martin Mureithi, who will give us more information about insurance, but he'll first introduce himself. We'll get to know more about him. Karibu sana.
Thank you very much, Mr. Maina.
Yes.
My name is Martin Mureithi, as you have rightly said, and I'm an insurance consultant. Yes.
How has been your journey in insurance? How did it all begin and why insurance?
Let me say that my journey in the insurance industry has been really an interesting one. I think mainly and basically what fuels me is to realize how much Kenyans require the services of insurance and most of the times they don't have people to take the message to them. Actually, this what basically made me to think seriously about educating Kenyans about insurance, because dealing with insurance not only means that you are just doing insurance business, it also involves educating Kenyans about insurance so that they can engage to understand more about it. And when they understand it, they are now able to enroll or to sign up and to take advantage of the various insurance policies that are available. Yes.
How did insurance begin?
I began insurance by default. I was invited by a friend, my former schoolmate and a long-time friend. He invited me to do insurance, and that is how I found myself in the insurance industry. Okay. And I must confess that I like it. Wow. It's a beautiful business. Yes.
We can look at the concept of insurance. What does it entail? Like, do I just give money and just wait for something? And you can also educate us on the types of insurance that are available as we go along.
Or to begin with, let me say that basically insurance is risk management. I'll put it this way. Insurance protects people against possible financial losses. So in a monthly language, insurance is basically protection against possible financial loss.
Wow.
Yes, and this loss could be as a result of sickness. It could be as a result of accident. The loss could be as a result of natural calamities, etc., etc. So whenever the loss happens to an individual, to a group of people, insurance basically comes to compensate them for the financial loss. Because any loss, whenever you suffer any form of loss, it means that your financial position has changed.
Exactly.
So basically what insurance comes to do is to protect those who have suffered losses and cushions them again, and it takes them back to the original position before the loss occurred.
What are the available forms of insurance?
Thank you very much, Mr. Maina. Insurance is basically divided into two main types. We have two types of insurance. The first one is called life insurance. If you want, you can also call it investment. And the second type of insurance, which is now non-life, is called a general insurance. When we come to life insurance, let me begin with the first one. Basically, life insurance deals in financial services sector, basically investing your money so that you can be able to get back your money at a later date with some form of profit that has accrued over the period. That money could be used to achieve one's life goals. It could be the education of the children. It could be construction of the house. It could be, for example, one wanting to fund their wedding, those who are getting into marriage and they want to do a beautiful wedding. You could save money in an insurance policy and later be able to use this money to achieve your life goals. Now, when it comes to the second type of insurance, which is general insurance, this one basically deals in insuring a property. And this is what we call non-life insurance now. For example, insuring the things like the buildings or the property. We have such things like, we have another type of insurance around the same class of general insurance. We call agriculture insurance. We have other policies like marine insurance. We have the insurance for the household goods, which we call domestic package. Interestingly, also medical insurance or health insurance comes under general insurance.
Oh, wow.
Yes.
Wow. And we would like to delve deeper. I know you'll have an opportunity on another time to talk about the other forms of insurance. But particularly on this show, we want to address ourselves to the medical or health insurance. And how does it work before we come to the types of medical insurance?
That's a very good question, Mr. Maina. Medical insurance, as we rightly said earlier on when introducing insurance and describing insurance, we said that insurance is basically protection against financial loss. And if you can recall, I said that the loss could be as a result of sickness.
Yeah.
Now that ushers us right to the medical insurance. Medical insurance, when you buy a medical policy as an individual, as a group, the medical policy basically is supposed to take care of the individual, the group that has signed up to the policy in the event that the members or the individual will suffer sickness or accident in the course of the policy. The policy will take care of the medical bills, which includes the medicine and the doctor's consultation fee, and so on and so on.
Okay.
All that will be taken care of.
So how does one begin the process? And because I know also the government has a form of insurance. Probably you can take us through the public form of insurance and how it works with the private insurance.
Thank you for your question. I will start by the first question. How does one sign up to a medical policy or a medical cover? Basically, when you want to buy a medical cover, like many other types of insurance, the insurance company will request you for your personal identification document. That is your ID. For the adults, that is for people who are over 18 years. The insurance company will require you to provide your identity card copy, your KRI PIN copy. Yes, so that you can be able to sign up. And you will also required to fill a proposal form or an application form for the cover. Once you apply for the cover, it takes, and you pay a premium to whatever you've signed up to, depending on the scope of the cover that you've bought. The scope of coverage could range from $500,000 to $1 million to $2 million to $3 million to $5 million, even to above $5 million. Depending on the scope of cover that you've chosen, the scope of the cover will determine the amount of premium that you will pay. Once you pay the premium, it takes the insurance company and the insured 30 days waiting period, so that the insured or the person who has taken the cover to start now enjoying the benefits of reaping from the medical cover in the event that sickness, as we said earlier on, catches up with them. If somebody becomes sick, you'll be able to enjoy the benefit of the medical cover by way of going to the hospitals again, the hospitals that are again in the panel of that insurance company. And remember, when you sign up to a medical cover, you are given what we call a membership card, a card that allows you to go to the hospital and prove to the medical facilities that I have an insurance cover with company A or B, and this is the proof that I have a medical scheme with them or a medical cover with them, and I am sick, looking for admission or for an outpatient treatment, whatever the case may be. In fact, in the recent past, very recently, during this period of COVID, many insurance companies, in terms of providing the membership cards, they have actually gone digital. We used to give physical cards with that looks like an ATM card. I'm sure you've seen a card like this. You saw those cards that we used to provide earlier on. But right now, we are providing virtual medical cards, or digital medical cards if you want, which is given to you digitally or online. When you go to the medical facility, you show them your virtual card, and they will proceed to treat you, depending on the insurance company that has covered you and whether the company is on the panel, and whether the medical facility is on the panel of that particular insurance company. Yes.
Before we go to a break, how does the public insurance, that is NHIF, work with a policy that probably you've taken as an individual with a private company? How do they work together?
Let me explain this. In fact, I get so many questions. Many people ask us in the insurance, especially those of us in the insurance industry, to compare and contrast private medical insurance and National Hospital Insurance Fund, NHIF, which is a government-owned insurance company. In terms of performance or in terms of a description, both of them are the same. Both NHIF and private insurance, they are the same in the sense that both of them are supposed to cushion you against a possible financial loss arising from sickness or accident. But the difference actually comes when you look at this scope. When you come to the medical insurance, when you come to the private medical insurance, mostly the scope of the cover is basically bigger than that one which is provided by NHIF. And then the other difference is when it comes to NHIF, they don't treat the case that you have presented to the hospitals. Could it be an accident or a sickness? When it comes to treating you, they will give you a cap to the limit of the treatment they are going to provide you. Let me give you an example. Somebody gets an accident and fractures their leg, and they go to an hospital like Kenyatta, KNH, and the only insurance they have is NHIF. They will be taken in and they will be billed, but the National Hospital Insurance Fund will pay up to a certain limit. It could be, for example, up to 150 or 200,000.
Okay.
Then there is a limit that the patient may be asked by the National Hospital Insurance Fund to cater for the difference. But right now, as you already know, and with the emergence of universal health care, the national government is trying to, and is in the process of revamping the National Hospital Insurance Fund to make it more attractive to Kenyans by way of making the NHIF cover to be able to cover Kenyans to a bigger extent or to a bigger limit, if I put it that way, in terms of taking care of their medical issues, the sicknesses, the accident, and all that. So basically, the government is in the process of revamping NHIF to make it attractive by way of increasing, as I said earlier on, the scope of coverage. Yes, but basically right now, as things are, the NHIF treatment is pegged to up to a certain limit that most of the time they will not be willing to go beyond.
Okay.
Yes.
Is it disclosed? Is it something in the public domain, or at the point when you are now supposed to process whatever it is, or it depends with case that has been presented?
I think basically and mainly it depends on a case-to-case basis. Yes.
Okay.
Yes, they will look at it depending on the case that is presented to them at a particular time.
Wow.
But also remember that NHIF also pays for the bed remit. Whenever you are admitted in an hospital, that is a very important point to mention. Whenever you go to a hospital for an inpatient case, not outpatient, when you get admitted, we say you are an inpatient. That's when we call it an inpatient case. When you go to the hospital, you see a doctor and you go home, we call it outpatient.
Outpatient case.
Outpatient case. So for inpatient cases where the patient will need to be admitted and to spend day and night in the hospital by way of sleeping there and spending their time there, the patient, the NHIF cover takes care of the bed remit.
Okay.
Yes,
Okay.
they will always pay for the bed remit. Now, when it comes to the treatment, that is where I said it depends on a case-to-case basis in terms of the kind of remit they are going to give you for treatment relative to the case that you presented to them. Thank you.
Thank you. We'll take a short break, and once we come back, we'll get to know more about the private medical insurance cover. This is JustConnect Online TV. Keep watching.
JustConnect TV, streaming live. JustConnect TV is your entertainment and educational channel. We broadcast authentic content that will inspire, empower, and stir up the potential and positive energy in you. JustConnect TV, streaming live. Get yourself a high-quality branded hoodie, t-shirt, caps, umbrellas, you name it, we got it. You order, we deliver. JustConnect. Ever felt the need to learn how to play a musical instrument or improve your music skill and never knew where to go? JustConnect School of Music is the place to be. We offer professional training in music sight reading, piano, drums, guitar, saxophone, bass guitar, and vocal training. We are located at Eprin Square, 3rd floor, room 26, opposite Buruburu Police Station. JustConnect, building worship. JustConnect TV, streaming live.
Welcome back. This is JustConnect Online TV, and today on Me and My Health Show, we are discussing about the medical insurance, and I'm joined by Mr. Martin Moreithi. We'll go further and look at the medical insurance companies, and the private medical insurance will give us more detail about it, the services that are offered and how it works.
Thank you, Mr. Maina. When you buy a medical policy, basically you start enjoying the services from the insurance company and the service providers. That is the panel of the hospitals and the doctors. And before we get there, you pay premium to the insurance company. Many people do not know the meaning of premium. Premium basically means the money that you pay to the insurance company for the policy that you have bought. If you buy a medical policy, the amount of money that you pay to the insurance company is called premium. And the premium that you pay to the insurance company takes care of you for 1 year, 12 calendar months. And this is a type of the policy that we call annualized policy. After 12 months, you are supposed to renew your medical cover. During the 12 months calendar, you enjoy the medical services through the insurance company to various service providers, the hospitals that are in the panel of the insurance company in question. Whenever one is sick, you can be able to go to the hospital, for example, Aga Khan, Nairobi Hospital, Kenyatta National Hospitals, just to mention a few, and you enjoy the services there. You are treated depending on the condition that you present there or disease. You are either treated as an inpatient case or an outpatient case. And whenever you buy a medical cover, again, remember, you have to choose between an inpatient cover and an outpatient cover. You can buy both in and outpatient cover, but you cannot buy outpatient cover alone.
Oh, okay.
You can buy in and outpatient cover, but you cannot buy an outpatient cover on its own. basically the insurance companies try to avoid the general public buying the outpatient cover alone because of the possibility of misuse. And of course, cases that have been documented of fraud. So basically you can buy in and outpatient, but you cannot buy outpatient alone.
Can you buy an inpatient alone?
You can buy inpatient alone. Yes, and it takes care of your inpatient needs, meaning when you get admitted to the hospital, that takes care of you when you are admitted. For the outpatient cover, it takes care of your outpatient needs. Going to see your doctor or the consultant, they look at you, they treat you, and they send you back home with medicine or whatever the case may be for you to be able to recover now at home. That is what we call outpatient.
There is something you mentioned about the panel of hospitals. Does it after you pay a premium? Are you given a list of specific hospitals, or you are covered? You can pop into any hospital that you feel like.
Actually, that is where I was headed to. Once you pay the premium, and your medical policy has been activated or is active in the books of the insurance company, you are given a policy document. The policy document basically stipulates the terms and conditions of the policy, the medical policy, and together with the policy document is also a list of the medical providers. For example, if you buy an insurance policy from Jubilee Insurance, they will give you the policy document, and inside the policy document there is a page that has a list and a panel of providers, the hospitals and the medical doctors or the consultants. And to answer your question now directly, when you buy a medical policy from a particular insurance companies, you will not necessarily go to all the hospitals. That panel is specific to specific hospitals. You will be directed to certain specific hospitals where you can get treated, where you can get services, because it's the hospitals is an arrangement between the insurance companies and the hospital to provide the service to the client, who in this case is going to be the patient.
And what happens in an event, I'm in a particular place and this hospital is not in the panel of the policy and I needed a medical attention?
A very good question, Mr. Maina. What most insurance companies do, they make sure that the panel that they give to their clients is all inclusive, meaning that you can be able to get a hospital or a consultant from whichever point you are in Kenya. If you are in northern east, if for example you are in the most remote part of Kenya, the northeastern, you'll get doctors there and consultants that are on the panel. If you come to a place like Nairobi, for example, you'll also find very many hospitals that are associated with the panel of the insurance company. Whichever county in Kenya you go, you'll be able to get a hospital in the vicinity. So that really does not become a problem. You can be able to access the services from wherever you are. Yes.
Going deeper into the policy itself, does it, once I pay a premium, can my eyes be checked? Can my dental be checked? What does this cover entail?
Thank you very much for that question. When you buy a medical insurance policy, the insurance company gives you what you bought. We started by defining the in and outpatient cover. If you buy in and outpatient cover, the insurance company will only take care of your in and outpatient needs. If you buy the inpatient cover only, the insurance company will take care of your inpatient needs only. Then there is, to the same medical cover, there are those people who feel they would want to enjoy more benefits beyond in and outpatient coverage. This is what we call auxiliary or optional benefits.
Okay.
The auxiliary or optional benefit basically refers to the dental cases, the optical cases, and the ENT. So for those who want to go for auxiliary benefits, you have to add to the premium that you paid for the in and the outpatient, so that you can also buy the auxiliary or optional benefits. So it means when you buy the optional benefits, you have to add up to the premium, and the premium goes up by a small margin again, or by a bigger margin again, from whichever angle you are looking at. Okay. Yes.
Is pregnancy an auxiliary service?
Very good question. Pregnancy and childbirth does not come under auxiliary benefits. When you are buying the in and outpatient cover, or when you are buying the inpatient cover, you can decide to choose maternity. Okay. When you choose maternity, you also pay a premium to it. It is on a case-to-case basis. When you choose outpatient, you pay a premium to it. When you choose inpatient, you pay a premium to it. When you choose maternity cover, you pay a premium to it. But what I would like to mention about maternity cover, that really becomes a big problem to many Kenyans, that they don't understand how it works. You cannot buy a maternity cover when you're already expectant. You buy a cover for maternity when you are not expectant. Why? Because there is what we call 12 months waiting period. Or put it this way, 9 months waiting period. So if one conceived yesterday, you cannot buy a medical cover today.
It will be tested within by time.
You will be time barred if conception has already taken place. Even if it means by 1 day. Yes.
So it means you'll have to wait for 12 months, then it becomes active, or how
so
does
basically what happens, let me explain that. You buy a medical policy, you enjoy the benefits for, including the maternity cover. You use the medical cover takes effect to a full year. Then at renewal, you renew. That is the time when it will take care of maternity needs. Yes.
Oh wow, it's obvious. I hope you got
and
that clearly.
To add another thing very much related to that, there is, when you buy a medical policy from any insurance company in Kenya, because the practice is basically the same. The insurance practice in Kenya and outside Kenya is the same. The practice is the same. Things are done the same way. If you buy a medical policy, there is what we call 30 days waiting period. If you buy an insurance policy today, you'll not be able to go to the hospital tomorrow or next week. You'll have to wait until 9th of January so that you can be able to use it. That is what we call 30 days waiting period. And the reason why insurance companies do this is to allow them to be able to manage their risks well. We say that insurance is basically risk management. Because if they allowed people to buy insurance policies when they are already sick, it means that people will come and buy insurance policies, the medical policy, when they are already sick. And basically these people will be telling the insurance company, I want you to treat me. For the insurance company, that means paying money out. And this is actually exposing them to risk. You can't take a medical policy when you're already sick. That is why there is a waiting period for the insurance company to be sure that you did not come because you are sick. Because during that period, if you are sick, they will expect you, if you fall sick within that period of 30 days, you have to pay for yourself. The insurance, the medical policy will not come in to caution the patient at that point. It is the same way that happens to other type of insurance, the general insurance. If you buy a vehicle today and it gets involved in an accident, you cannot go and ask an insurance company to insure a vehicle while it's still at the garage. They will know that your vehicle is already at the garage. How? It's because they will send you to go and do a valuation. And they will, by way of sending you to do valuations, they are trying to determine the condition of your vehicle and to be able to determine the adequacy of the cover that they are going to give you. So you cannot insure a vehicle that has already been involved in an accident. It would be the same way going to an insurance company when you're already sick and asking them to insure you. They will not accept because the risk is already glaring. It's already there. They can see it.
I would want to ask this. Say, for example, I've been paying my insurance for the last 3-4 years. And for some financial issues, I've not been able to pay after the 12 months to renew it. Then it happens that 4 months later, I go to the insurance company and I pay. Will I be treated like a new entrant, or will my history give me an advantage so that I don't have to wait for the 30-day period?
A very good question. When you buy a medical policy, it will run for a period of 12 months. After 12 months, the insurance company will expect the client to renew the cover within the first week or within the first few days after expiry of the medical policy. If the client delays, the policy will lapse. And if the policy lapses, there are disadvantages that are associated with lapsing. The insurance company would have to take you as a new entrant. So it means the benefit that they already knew about the client, including the history, for example, the sickness history, will have been lost. But if you renew your cover in time for the second year, there are other benefits that come during the second year that one was not able to enjoy during the first year. Why? Because the insurance company has already been able to underwrite your case, and they are now able to determine the kind of a client and the kind of a client they are dealing with, and the kind of risk this client may be posing to them. By way of underwriting your risk further, they are able to increase the benefits. For example, the pre-existing conditions like surgery. If you have surgery, if you have, for example, had a previous surgery and you take a medical cover, the insurance company will not take care of any medical bills associated or related to the surgery immediately, up to until the end of the first year. During the second year, the pre-existing condition, that is surgery, will be taken care of. The other conditions are diseases like cancer. If you take an insurance cover, the first year they will not take care of cancer. We know very well right now there are insurance policies that are designed particularly to take care of cancer. In fact, even when you are sick, somebody who has cancer today, there is a policy that you can buy and it will take care of the problem that you have, but not until the renewal of your cover. You buy the policy and there has to be a 12-month waiting period. Yes.
So what you are saying is that you have to be on your toes to ensure that
your policy is renewed in time. Because when you renew during the second year, the insurance company starts taking the care of the cases that were previously during the first year under what we call exclusion. Exclusion in insurance means that the insurance does not take care of that condition or that sickness. That is what we call an exclusion. Something that is not included in the contract is what we call the exclusion. Okay. And during the second year of the cover, the exclusion becomes inclusion. You get the point? The conditions that were previously not covered during the first year, they now start getting covered during the second year. Some of them, to some insurance companies, during the third year, they start covering some more conditions that could not be covered in the first and the second year. Because why? Again, it boils down to the underwriting issues. The insurance company has been able to stay with the client, underwrite their policy, and be able to determine the kind of benefits they are going to give them, depending on their claim history. Yes.
I'm just looking at this and probably will address both of these issues. Say, for example, I've insured, at this particular time I had a lot of money, so I picked an insurance, say for 5 million. Then for some reason I'm not able to afford the premium to renew that particular
scope of cover.
Yes. So what happens if I go to the lower one? How does it work? And as you are addressing that, you can also educate us on these policies and what do they cover. If you pay for the premium for 500,000, if somebody pays for 10 million, what is the difference?
Thank you for your question. You can buy a cover limit of 5 million. At renewal, you feel you are not able to continue with the 5 million cover because of the amount of premium that will be required. One can downgrade to 2 million or to 1 million or to 500,000. It is allowed. We call it endorsement. You can endorse your cover down once. We call it in insurance terms endorsement. You downgrade your cover, or you take a lower level that is comfortable in terms of financial reach. Yes.
So there is that issue you talked about exclusion as you are addressing the previous issue. So are there, if you pay less, will you be excluded on some things you had been included?
For that cover.
For a higher one, now endorsing it downwards.
No, in terms of exclusion, just because you've paid a lesser premium, there is not going to be an exclusion as long as you renew your cover in time. What will be different here is the amount of cover that you'll be getting from the insurance company. Remember, previously they could pay for you up to 5 million. When you endorse and take 2 million, it means that they can pay up to 2 million for you during that year. In terms of exclusions, there will not be exclusions to it just because you downgraded the cover. The benefit will remain the same. What will change is the amount of money that the insurance company can pay for your treatment. Yes.
And what is the difference between these policies? 500,000, 2, 5. What, in a nutshell, what do they cover? What does each category cover?
That's a very good question. The reason why insurance companies decided to come up with different cover limits, mainly there are companies that give even a cover limit of 100,000 per year. And 200,000, 300,000, going up that way. The reason why there are all those categories and limits is to give people from all walks of life, people from different economic backgrounds, the chance and the opportunity to buy. One is able to gauge themselves and decide, for me, I can afford 500,000 per year. I can afford 100,000 per year. Another person will say, I can only afford 2 million. That is why the insurance company categorizes to give different people, depending on their economic strength, the ability to buy, depending on how much they are able to pay. That is why there are all those categories. Yes.
And I would like also to understand, because every cover limit has got the number of dependents that it can cover. Are there limits depending on the number of people that can be a dependent on a particular premium, the person who has paid, and how does all this work?
When we go to a medical policy, when it comes to a medical policy, there is a main member who is called the principal. The principal comes with his people who are called the dependents. Let's take, for example, like a parent. A couple decides to buy a cover. It could be Maina plus the family. Maina becomes the principal member. The wife becomes the spouse. Then the children become dependents. The number of dependents can be as many as you want. And remember, as you choose more dependents, it means that your premium is going high. Because every dependent pays a premium. Everybody pays a premium. The principal member pays a premium. the spouse pays a premium, then the children who are the dependents, they pay a premium. You can choose as many dependents as you want. You can also choose a dependent who is not your child. You can decide to buy a medical cover and take a child somewhere who is not doing well, and you decide, I will support this child, I will buy a medical cover, and this child, even though may not be my blood child, the child becomes your dependent. Yes, so in terms of the number of dependents that you can choose as many as you have.
How do you, assuming you had 3 dependents and you happen to have a new baby,
Yes.
how do you incorporate them in the middle of the year? Probably
a very good question. If you buy a medical cover for 12 months, it runs for 5 years, and then you get an extra member in the family. That member is incorporated to the insurance company. You just need to provide to the insurance company the birth notification or birth certificate, then the child, and pay a premium for the child, and the child will be incorporated in the medical cover, and the child or the dependent will be able to enjoy the medical cover. That's what happens. Yes.
We will go to another issue of the personal accident and how it works. You can give us detail on this.
A personal accident is actually basically a personal accident as the name connotes. Basically, it means when you buy a personal accident cover, it will take care of accident only, not sickness. Accident only. Accident, for example, could involve something like fire if you get burned. Accident could mean road accident. Accident could mean falling down and fracturing your hand or your leg. That's an accident. So the personal accident cover is popularly called PA. Personal accident cover takes care of your accidental needs only.
Okay.
And apart from the accident, it also takes care of death benefits. If you buy a personal accident, apart from paying for your accident medical bills, it will also take care of what we call accidental, death. It take care of death benefit as well. This means that if one dies as a result of accident, the dependents are paid, beginning from about 250,000 to half a million to $1 million, again, depending on the amount of premium that you paid for the person, because the personal accident also has a scope. There is a personal accident for 250,000. There is a personal accident for 500,000. There is a personal accident for 1 million. There is a personal accident for 2 million, all the way to 5, even 10 million. So when you buy a personal accident, let's do $1 million, which is very standard. If you buy a personal accident for $1 million, it means if this person dies accidentally, the dependents or the next of kin will be given $1 million. If this person dies accidentally, if this person survives the 12 months and gets an accident, for example, the personal accident will take care of your medical bills. For accident only, not sickness, accident only. Then there is a third benefit to the personal accident. We have seen the first thing is takes care of death. Second one is takes care of accident, medical bills arising from accident, right? Then it also takes care of disability. If you buy a personal accident that become totally disabled, the personal accident pays to the sum insured, which is half a million. If one becomes totally incapacitated, incapacitation has to be confirmed by a medical doctor appointed by the insurance company in question. If one becomes incapacitated, one is given, if you had bought a personal accident for 1 million, you'll be able to enjoy a benefit of 1 million. Then there are other benefits that are associated with a personal accident. When one gets an accident, for example, a fracture, when you are recuperating or recovering, you'll be able to enjoy the benefits of crutches, walking crutches, and the wheelchair will be provided again. It's a benefit that again comes by comes through the personal accident. You'll be able to get the crutches for walking, a wheelchair to wheel you around in the event of an accident. Then the last benefit, we call it recuperation benefit. When you are recuperating, let's say you get an accident, you go to the hospital, you are treated, then you are told to go home and start recovering. During the time you are recovering, let's say, for example, you take 1 week to recover. Most insurance companies take up to 7 days. They will be giving you some money every day.
Wow.
We call it the recuperating benefits. Depending again on the scope of your cover, they may be giving you something like 2,500 every day for a period of 7 days. So basically those are the benefits of a personal accident. And remember, encourage drivers to buy personal accident because the insurance that covers the vehicle does not cover the driver. In the event of an accident, what will protect the driver and pay for the driver's medical bills, or could it be incapacitation, as we have said, or death? What would ultimately come to pay is not the motor policy. That one is for the vehicle. What would take care of your bills arising from an accident is your personal accident cover. It's a very important form of insurance that unfortunately many people don't know about. Thank you.
Now that you have created that awareness, I believe the viewers will be in a position to take advantage of that. As we come to a close of this, how do we claim? How do you lodge a claim of, say you are admitted in hospital and you need to use this cover? How do we claim the services that you have already paid for in the policy?
A very good question. When it comes to a claim now related to a medical policy, when one, for example, is admitted, let me start with the medical insurance, the one we are talking about right now. When one gets admitted in the hospital, for example, let's assume one is admitted in hospital A. If the client or the patient goes to hospital A and they are taken in and admitted because they are sick, the hospital will bill the insurance company directly because the hospital facility will see from the system that this client is covered by insurance company B, and this client or this patient has a medical policy to take care of them. They will start billing directly to the insurance company. If one, for example, has a medical cover limit of $1 million, they will continue billing up to, if assuming that the client will still be in the hospital, they can bill the insurance company. I mean the insurance company can bill the hospital up. I mean the hospital can bill the insurance company up to $1 million. The insurance company will pay
up to the $1 million
to the hospital because this client bought a medical policy to take care of their hospitalization. So if it exceeds $1 million, the insurance company will liaise with the hospital and tell them your client has exceeded the limit. In fact, they don't even wait for you to exceed the limit. The hospital will liaise with the insurance company way before the limit is exceeded. But if there is no issue of a limit being exceeded, you will be treated and discharged. So the insurance the hospital sends the bill to the insurance company. And the insurance company looks at the bills and looks at the records they have for the client in question, and they settle the hospital bill. That is for an inpatient case. For an outpatient case, one goes to see a doctor or one goes to the hospital. You present your virtual card or your membership card for the insurance. You are given the services, you go home, and the bill is sent to the insurance company and they pay the medical provider or the hospital or the facility. That's what happens. That's how the claim process is done.
Earlier on, as we were beginning this show, you had mentioned some benefits, the benefits of an insurance policy, especially because you talked about insurance being a protection of a financial risk. Probably you can take us, as we sum it up, on the why should one take a medical policy?
That's a very good question, Mr. Maina. We said at the beginning that insurance is protection against financial loss. It is very important for people generally, Kenyans and the world all over, to buy medical insurance, because when one becomes sick, this one becomes an immediate burden to the family, financial burden. Because if you don't have a medical cover, one gets sick. For example, you go to the hospital and you are admitted, the bill goes high. This means that the family or the individual is forced to pay a lot of money to the hospital. Sometimes you find individuals using their title deeds or other collateral so that they are able to take care of their hospital bill. In a way, this actually puts them in a financial risk. Sickness will put families and individuals in financial problems whenever they don't have medical insurance. Because when you have a medical insurance and you become sick or you get an accident, whatever the case may be, your insurance takes care of your medical bills. And they pay that. You won't have to sell your vehicle, you won't have to sell your piece of land, you won't have to have to call people for a fundraising so that you can solicit fund to raise to pay for your medical bill. And that's now how insurance steps in or comes in to take care of individuals and families whenever sickness strikes in. For example, COVID has been a very big problem. It has been a very big burden in Kenya and world over. And a very interesting one for you to hear, many insurance companies now are actually covering COVID. Initially, COVID, when it came to Kenya, the insurance companies were not sure whether they are able to underwrite this risk. But after studying the disease for some time, they realized that this disease, after all, is not that big risk. So many insurance companies in Kenya, actually most of them, have started taking care of COVID. They all, put it this way, they are underwriting the COVID as a sickness. And when you go to hospital and you are treated for COVID, whether in or outpatient, the insurance companies will pay for your bill, again up to a certain limit. But basically, the good thing is that COVID is not an exclusion. When you buy a medical policy, COVID is not an exclusion. It's included. The insurance company will pay for it. The hospitals will treat you. So, as we come to the close, we really encourage people to buy insurance so that the insurance cushions them against financial losses that could arise as a result of accident, sickness, natural calamities, etc., etc. Thank you very much. May God bless you.
Amen. Our viewers, you can tell us where our viewers can get in touch with you. Probably we could share your email or something, or where you are based, so that in case somebody wants more inquiry, then they can get to you.
Thank you very much. Those who would want to enjoy the insurance services from me or from the people that I interact with, because per se it's not me alone. I deal with insurance. I deal with major insurance companies in Kenya. I am an intermediary, meaning that I am the link between the client and the insurance companies. The insurance companies that I deal with in Kenya basically are Jubilee Insurance. There is another company called ICA Lion Insurance. There is APA Insurance. There is Britam Insurance Company Limited. And then there is another company called, let me remember the other company. We also have First Assurance Company. So basically, I deal with the major insurance companies in Kenya, or we deal with major insurance company in Kenya as intermediaries. If you'd like to reach us, you can call us on 0721 329 314. 0721 again 329 314. Yes, that would be the easiest way of reaching me or reaching us.
Thank you very much.
Yes.
That has been Mr. Martin Moravi, And my name is Njama Ngugi. I've been your host on Me and My Health. And I believe that you've gotten good information that you'll be able to run with and be able to get help when you need it urgently. Thank you so much. This is JustConnect TV. Bye-bye. May God bless you.
JustConnect TV, streaming live. Get yourself a high-quality branded hoodie, t-shirt, caps, umbrellas, you name it, we got it. You order, we deliver. JustConnect. Ever felt the need to learn how to play a musical instrument or improve your music skill and never knew where to go? JustConnect School of Music is the place to be. We offer professional training in music sight reading, piano, drums, guitar, saxophone, bass guitar, and vocal training. We are located at Eprin Square, 3rd floor, room 26, opposite Buruburu Police Station. JustConnect, building worship. JustConnect TV is your entertainment and educational channel. We broadcast authentic content that will inspire, empower, and stir up the potential and positive energy in you. JustConnect TV, streaming live. JustConnect TV, streaming live.